Good day, everyone. My name is Lusito Mthethwa from Dispersive Consulting. At Dispersive Consulting, we are an accounting, tax, and management consulting company helping business owners gain an understanding and control of their business finances. And welcome to our second installment of helping business owners gain an understanding and take control of their business finances. So today we'll be talking about VAT, which is also known as value-added tax, and it was previously known as general sales tax. So what is VAT exactly? So we want to try and give a more detailed understanding because in this video series we'll be addressing issues that affect a lot of business owners and try and simplify them to the best of our ability. So VAT is an indirect tax that is charged on the sale of goods and services in the economy of South Africa. And then revenue uses this tax type in requiring certain businesses to register and charge VAT on the taxable supplies of goods and services. So it is a method of collecting revenue which is applied by the government. So these businesses then become VAT vendors once they are registered for this VAT. And then these businesses then act as agents for government to collect, or in collecting this added tax on services and goods. So it's very important to understand this, that the money that you collect for VAT or the VAT that you charge on your services and goods, it's not your money. It is money that belongs to the government, and you are merely acting as an agent for government in collecting this VAT. So who then registers for VAT? Because it's not every person that can register for VAT. It is any person that's carrying out a business can register for VAT. However, there is certain requirements in those people as well that are carrying on business. And then the term persons is also not limited to just businesses. It also can apply to certain individuals, to certain partnerships that are formed, and also municipalities. So it is a legal term that can apply to any of those groups of people. However, there's also requirements for certain individuals to register for this VAT. It's not every person that can just walk in and register for VAT. So the first requirement is that it's very mandatory, or it's rather mandatory for each and every company that has reached or will be reaching a turnover of 1 million to register for VAT. So there you have no choice but you have to register for VAT. However, also a person can voluntarily register for VAT if there are taxable supplies that have been made in the past 12 months period, or they can prove that they'll be making such taxable supplies, can also then voluntarily register for VAT. But we have to then look at the issues that because we get a lot of people asking for services to register for VAT without understanding the implications or the processes that happens once you register for VAT. So once you registered for VAT, you will have to pay over that 15% that is charged for VAT. We'll touch more into that, how the payment works. But once you register for VAT, once you start collecting that VAT money, it is not your money, it's money that belongs to the government. And there are certain ways of managing that, which we'll get in either in this first part of our VAT discussion, or in the second part of our VAT discussion. So how does it work? So when you are registered for VAT, you need to add 15% on the price, on the selling price of your goods and services. So for example, if you were charging 100 Rand for whatever service or whatever goods you are selling, you will then add 15% on that. So now your service or your product, it will now cost 115 rand. That 15 rand belongs to the government, and then that 100 rand remains as your part of income that you have made. So there is a limited range of goods and services where you do not charge VAT, which are then called zero-rated supplies and services, or exempt supplies and services. But we won't get into deeply into that right now. We will then also cover that in part 2 of our discussion. But also, if you need to get a list of that after this video that you're watching, you can go to the SARS website. It will provide you with a list of those zero-rated and also exempt supply. Look for the VAT Act, and then you'll get that information there. And then VAT on sales or the revenue is called output tax. So this is now what you will call output tax, or your accountant will call output tax. You just know that it is VAT on the sales. So it is VAT, it is sales VAT in simple language. And then you can then also claim back from SARS on all the VAT that you have paid for purchases. So as much as you are selling, you have to buy whatever you're selling from other service providers or other merchants. So you buy the services, you buy the goods, and then they charge you VAT as well. And if you are registered for VAT, or if they are registered for VAT, they will charge you VAT. And because you are also registered for VAT, you can then claim back that that VAT that you have paid expenses on. It gets a little bit complicated in practice, but I hope I can try and clarify it as much as possible. So for example, if then you bought goods for 115 rand, so this is now a supplier that charges VAT on their goods, and you've bought them for 115 rand including VAT. So then now you can claim back that 15 rand. So this means that at the end of your VAT period, you will not pay any VAT over to SARS, because you charged 15%, you are claiming back 15%, so it becomes zero. So how you calculate VAT is that you take your sales VAT and then you subtract your purchases VAT, and then the difference will then determine whether you pay VAT over to SARS or you get a refund from SARS. So how this works is that if your sales VAT is more than your purchases, so if your sales VAT is more than your purchases VAT, you then have to pay VAT over to SARS. You will pay the difference because you're taking your sales VAT, you're subtracting your purchases VAT, and then the difference is what you need to pay over to SARS. So if, for example, you bought goods for you sold goods for 230,000, meaning that 230 rand. Let's keep it with hundreds, 230 rand, and then you purchased services or goods for 115 rand. Then it means then you charged 15 rand more than what you purchased. So then you'll pay 15 rand over to SARS. So that's basically how it works. So if your sales VAT is less than your purchases VAT, that means then SARS will give you a refund of the difference. I hope it's clear. And the VAT on purchases is then called input tax. So we will go more into detail with the calculation and use more examples in part 2 of our presentation, so that it becomes more and more clear. And as your accountant, or if it's us, we work with your VAT reports and discuss this with you, it becomes more clear and understandable, because our primary aim is that you as the business owner understand how these things work. And so in part 2 of our discussion, we will discuss zero-rated, which goods and services are zero-rated, or when do you not charge VAT when you're making your sales. And also we will then discuss exempt, where is which goods and services are exempt from VAT. And then because there's different types of transactions of goods and services that are zero-rated and exempt, so we will discuss that further. And please do contact us for further assistance on this VAT issue. Our numbers and our social media platforms will appear at the bottom of the screen, and then you can contact us and we'll be of assistance as quickly as possible. Thank you very much.